What's up, everybody? What's up, traders? This is Justin from Ivy League Trading. Let me make sure that everything is live or good as far as the sound. We've had issues the other night. And just want to make sure I don't ramble on and nothing. What's up, everybody? There we go. We're good to go. How's everybody doing tonight? Thank you guys for joining us. I'm Justin. This is the Ivy League live stream. We have a huge live stream in store tonight. Okay? CPI data, we have jobless claims tomorrow, we have PPI tomorrow, we're coming into earnings, banks. I mean, it's a lot. I have a lot I want to go over, so make sure if you're watching this to stick into the end. Okay, I have a lot of information. I have a lot of market analysis that I think you're really going to want to see, and after the stream, it may change your view on things. These are just my thoughts. Please read the disclaimer, okay? Please read the disclaimer. Make your own decisions. Trading, this is not financial advice. These are just my commentary, views of the market, what I'm seeing, getting my thoughts out there. They can and they will change as time goes on. If you don't know, we are live Monday through Friday, 7:30 a.m. to 4 p.m. Eastern Standard Time. So again, thank you guys for joining us. I'm Justin. If you guys have any questions, throw them in the chat. We'll cover them. If you have any tickers you want to go over, any stocks, throw them in the chat as well. We're going to go over trades tonight. We're going to go over a little bit of the data, but we all know CPI was good. All right, at least from what the data they're giving us, it's good. We'll go over my trades, what I think tomorrow. What is it that I want to see tomorrow? I have a few stocks or sectors, more importantly, that I want you guys to pay attention to that I think could be getting ready to break out. All right, I'm going to cover them, okay? If you find this information valuable, please like, share, and subscribe. We greatly appreciate it. We, as in me, I do all of this. This is just, it takes a lot of time. It takes a lot of effort. It takes a lot of time away from family, this, that, the third, but it's okay. We get the message out. If it helps somebody, that's all that matters, okay? If you're able to, benefit from the information, from the analysis, come up with your own decision, this is what we're all here for. We're all here to eat, make money together. You have anything you guys see, again, we're live Monday through Friday, 7:30 to 4. Come and chat, come hang out. You have any trade ideas, or if you even just want to ask questions about what you're seeing. You have a trade and you want another trader's thoughts. All right, we're a group of traders. I've been doing this for about 6-7 years now. All right, I would not be on here if I didn't think that I had somewhat of the experience to be able to come on here and do these live streams. So again, thank you for joining us. Let's get into it. First things first, we got CPI earlier today. In regards to the CPI, let me tell you that the Fed still uses PCE. All right, that has not changed. The PCE, their thoughts, at least what they're telling the markets, because we've had a lot of Fed members come out this week. And it's no surprise that this is not just randomly scheduled. You haven't had a Fed member back to back, Monday, Tuesday, Wednesday, Thursday, and probably even Friday. They're here to talk to the markets so the markets can start pricing in their thoughts. And it seems as though that they want to possibly get to 5.5. Possibly 2 more rate hikes of 25 basis points. We haven't got there yet, so we'll see. All right, they keep talking about getting ahead of inflation, okay? They're making progress. Obviously, this is since October we have had decent data, but their thought is we don't want to stop too soon. Okay, well, you don't have to stop. You could just hold it where they are because they keep referring back to the 70s. Now, mind you, they probably don't have to do this, but I'm going to tell you it's for the good of nature, I guess. Now, what do I mean by that? I think things are way overextended, and what if they could? They won't do it. If we could get a Paul Volcker, not just some sectors, but where all sectors feel it, what would that mean for the future? Okay, that would give us a great ability to be able to have the next 10, 15, 20 years of growth without, you obviously have things that arrive that are, that just come up, and there's nothing you can do about it. We had COVID, I'm not going to say a war, but things of that nature that cause, disturbances. So it doesn't matter what I feel or what I think, I still feel like, prices, people that are retired get hit the most. All right. They say that we still have sticky inflation. We're not in a recession. You had the New York, I'm pretty sure he's from the New York Fed member, said that he doesn't have a recession in his forecast. All right, well, go see people in different sectors like real estate. Now that market is still up around all-time highs, I believe, and certain sectors are feeling it. So it all depends on who you ask what's going on in the world as far as the recession is concerned. Some people are not feeling it at all. Some are feeling it more than others. All right. So with that said, PCE, okay, that is what the Fed uses. There, we just got that not too long ago, and it was around fives. It was 5 something, if I remember correctly. I go over a lot of data. You also had Bank of Canada interest rate decision as well today. So the rest of the world as well, Europe, Australia, they're still talking about raising interest rates. Now, I think the Fed gives us this rate hike. Obviously, I've said it since Powell, the last time we had Powell. I'm pretty sure our next FOMC minutes are January or July 26th, I think, off the top of my head. Do not quote me. I may be wrong, but I'm pretty sure that's right around, it's the end of July. I'm pretty sure it's the 26th. So, that, in a nutshell, helps us give us an analysis on what do we think's going on. All right, we're going to go right now. If you could, hit the like, subscribe. We're trying to get to 100 likes. Don't be shy. Comment in chat if you have any questions about trading. If you're new, there's somebody, I assure you, that's out there that is trying to learn to do this the professional way, the right way, the correct way, and they probably have questions too. And if you probably have a question that they are probably wondering the same. How you doing, Hayden? How are you tonight? So, again, I've been doing this for about 6-7 years, maybe 8. All right, I stopped counting because it's not important. Knowing how long you've been trading doesn't make you money. You're going to have good years, you may have bad years, but as long as you can be with a group of traders, and again, we're live on YouTube for free, Monday through Friday, 7:30 to 4 Eastern Standard Time, and we'll go over earnings calls. Earnings calls are great. We'll stay later than 4 after the market, especially for the earnings, because what earnings also do, they don't just give you an insight on just the company and what it is that they're doing. Oh, awesome, man. Awesome. Earnings allow you to read the tea leaves. Now, if you would have went back before Meta had its big sell-off, you could have read the tea leaves, but you would have to be educated to know how to do this. And I'm going to give you an example. All right? It's going to be different every time, but you had Mark Zuckerberg, for instance. So once you have a company, the original product is changing, okay? That means that the market's going to take it that there is a problem with the original business model that got them to where they are, and they feel they have to move on to something else. And until that something else works, the market's going to say, hey, there's an issue here. If you're going to focus all your time on that new product, we haven't seen anything to make us believe that this can compete with the original business model that got you to where you are. Well, of course, turns out now, yeah, Mark Zuckerberg, that was one of the greatest opportunities to be buying. But again, if you read the tea leaves, what happened? 2 quarters before the big sell-off, all right, the quarter before the big sell-off, Mark Zuckerberg spent his whole time talking about Meta. He did not want to talk about Facebook at all. And what happened? You got the following earnings, bang, got hit. Okay, that's the tea leaves. That's what I mean. Reading what it is they're talking about. First Republic, they had their earnings. Guess what? No earnings call. said, we're not doing an earnings call. That tells you right there all you need to know. They're not going to be a business much longer. Oops. Sorry, I just wanted to make sure that my cat could get in because I had a shot. So here's what I'm going to do, guys. So real quick, we're going to go through the sentiment real quick. Tomorrow, because I want to make this I want to get through this. You know, sometimes it takes as long as it takes, but I don't want to be on here forever for you guys. And again, if you have any questions, he's that's true. You know, that's very true. You know, that's very true. But he was right about the metaverse, at least with the you know, I guess they're not goggles, but you guys know what I mean. You know, but here's the thing: is what I'm getting at is that the market priced in. This ain't working. We're going to wait for you to show us that it's going to work until it does. Now look at Apple. You know, he was actually the innovator there. I will give him that. We all got to give him that. The Meta, he, you know, because you didn't really think about it as far as learning how to be a surgical doctor. Like there's like just visualizing a construction area and like the different things and utilities that it can offer with watching movies. Like all those things, you know, when a product is new, you don't know that stuff until it's released and it's out to the public and you can get innovation out of it. And then things just happen. Like we didn't know what was going to happen with the internet, with emails and all that stuff. But still, you read through the tea leaves, there's a problem with Facebook. We have no idea what he's talking about with this Meta stuff, you know, and you had the biggest, you know, downside that, you know, a big mega cap tech stock has ever seen. Important, again, guys, important live stream. The markets, that's what I want to focus on. Real quick, tomorrow, whether this number comes out good or bad, I want to see, and I want you guys to start watching. Now, it's still early. It may take fall into winter time. All right, whatever, what have you, guys. Watch how the market reacts to the initial jobless claims tomorrow. Just watch how it reacts, no matter what the number is. Do I have predictions on Snap? I can look at the technical analysis. I think, and I'm going to get into Snap in those sectors. Like, just Snap alone is like reading the tea leaves. Because what do we have? We have mid-cap tech. Now, this is, guys, you guys are going to love this because I don't know. If nobody's told you this, and if you haven't been in a market prior to COVID, you're going to see the picture as soon as I tell it to you, and Snap's a part of it. So thank you for bringing up Snap, Hayden. And that's actually a part of this stream that I want to get you guys to start noticing. Because you have to throw whatever you think out the window. Are we going to have a recession? More than likely. Well, we have to wait. What happens is you guys see, when the market gets data that the banks, what happened? Boom, went down. There's a problem with the banks. So until the problem arises or until a situation arises, what have you, is when the market will price it. Because you can't price in something that you don't know the details of. How bad is it? Is it it's just mild? Is it a pullback? Is it a 15% pullback? Like, we got issues here. Like, what's the Fed going to do? Things like that. You know, and obviously the Fed stepped in. They backstopped them. And that's also helped the rally because their balance sheet. All right. I don't know if I still have their balance sheet up. But their balance sheet, again, we're still up here. They haven't even worked on this issue. So there's still liquidity floating in the system as far as MBSs, you know, all the stuff the Fed put to work with their money. So tomorrow, though, guys, watch the jobless claims, because no matter if it's good or bad, watch how the market reacts. Because if it's good and it's still like way under, how does the market take it? Does the market say, okay, CPI is down, PCE is still up a little bit, but we're making progress, it's coming down, China's reopened, okay? A lot of the money that was spent is kind of, you know, there's not such a demand as we had about 8-10 months ago, or a year ago or so, when everybody was just coming out, had all this money, and just, you know, we couldn't get stuff out fast enough. People were spend. So how does the market take the jobless claims? Because if the jobless claims comes in good, all right, you can also at the same token watch this, have this up. This is the CME Fed watch tool, okay? And what you want to go to is the September number. All right, July, we're more than likely going to get our 25 basis points, okay? We're going to get our 25 basis points. What's going on here? I think it just messed up on me. But anyway, yeah, so September is what we want to see. This will be the final rate hike. Now, look, it's went up. It's up to 81% now. All right, so if the job number is good, the Fed has two mandates: price stability, maximum employment. Prices seem to prices aren't going up. They're just high, okay? There's not a real reason at the end of the day for prices to continue to take off like they did in the 70s, and they relate to the 70s. Like things haven't really slowed down, but the velocity. So there's a thing that is called velocity of money. It was a measurement that they used to put out, and they don't put it out no more. You can get if you go online, maybe I'll cover it on tomorrow's live stream or during the live tomorrow. I'll show you guys how to come up with the velocity, because the velocity of money is important. And velocity of money is the rate. How fast is the money circulating and getting passed on from one person to another? Okay, that's really slowed down, and velocity is a key component to all this stuff. It doesn't necessarily have to do with liquidity, but if the velocity is high, obviously there's liquidity. It's just the rate of the dollar circulating. And I don't know why they don't put out that data anymore. I think it used to be not Cincinnati, but so one of the Fed, it might have been St. Louis maybe that used to put it out. St. Louis Fed. So anyway, tomorrow, the jobs numbers, guys, sorry. If it's good, how does the market take it? Now, you have to remember, we have earnings literally just getting started the end of this week. We could rally. We could just sit up here and earnings be mild. And then what? Do we get to 450 and we pull back? Do we just sit in this range? What is it? I'm going to get into it. Tomorrow, if the job number is bad, how does the market take it? Does it change the September? I'm sorry. Yes, the September Fed funds rate, or the percentage, okay? And you want to watch September. Now, July, we're more than likely getting it. It would be a surprise if we didn't, and that would move the market, okay? But again, they look at PCE, and that they say that it's still high. Now, I'm telling you guys, the Fed, this is not like the 70s. China's opened up, okay? It's not like China's still locked down. It's goods are being manufactured and made, this and that. But yes, we have down the road this, where you can start seeing slowing of spending because of the college tuition forgiveness, whatever it was. You have all those things. You have energy starting to rise. And the other thing about energy is energy will actually go up as well, because if they feel a recession's coming, they're not going to make as much oil because they don't want to be left with it. And if they don't want to be left with it and have to pay to get it stored because they assume a recession's coming within the next year, prices are going to go up once the demand is not there anymore. And you got those numbers today. Look, all this data is out for all of us to see. Look at this, minus, guys. Nobody's talking about that. Now, it's not some big end of the world thing. Just keep an eye on it, because if they start seeing a contraction, they're going to start contracting themselves, because they don't want to pull the oil out of the ground and then be stuck with it. And then the buyer's like, I don't really need this. I'll give you like $20 a barrel. So they want their money, and they know scarcity, especially coming into a recession when things slow down, is what's going to get them paid, because, whether you want to say it's the administration, this or that, we're relying on OPEC. So it is what it is. Whether I like it or don't like it, it's neither here nor there. So let's go into a couple things that I want to get into. No, what CRM did was 2 days ago. So you may not have been on the live stream when I talked about it. That was actually one of my plays 2 days ago. What they did was there was just news that they were going to raise the price of their product, is why it's up. But it also has to do with Snap. Let's get into it. We're going to get into it right now. So why I'm talking about a recession later in the future? Because the recession is not here right now. So when we get jobs numbers tomorrow, we have had one, maybe two upticks in jobless claims. Okay, but it was two good numbers, and then we had an uptick, and then the past two numbers, or no, one number was decent. Like it was better than the prior rise. So we want to see how this does. So how do they take it? Like maximum employment, inflation as far as CPI and PPI, we still haven't even got the PPI number yet. That could go up a little bit. I don't think the market's going to worry about it unless it's a crazy surprise. That's when the market starts to price things in. But the jobless numbers, if it starts to see a tick up in employment, the market may rally. I want us to get a pullback, but we could still see this market just go. And then is it earnings that bring us down? Because remember, I was told this, and as far as I've seen throughout all the years that I've been doing this, whenever you have earnings usually like across the board that are good and not bad, whether they don't have to be great, but if they beat and they're just slowly raising their forecast for the next quarter, guidance is the word, the market goes up. The earnings haven't been great prior. Okay, we had all this CPI that the economists couldn't get in, that gave us all the volatility. You had the war, you had all this unknown. Well, economists start getting the numbers right. We've seen progress since October with CPI. Now, when we're going to see like the unemployment rate and everything start to tick up? It's not on here now, but you guys need to see this. This is the unemployment rate, and I'm going to put in Fed funds rate with this, and you guys are going to see literally to a T the time to get a rough estimate when that recession should come. All right, and we've just broken above, Fed funds rate has just broken above the unemployment number, which is key. Okay, so we have unemployment rate, and we'll put in Fed funds, and the little girl is on her way. She just came in. Her name is Abby. It's my little cat. Add line. Let's go here. All right, guys. So you see how we just surpassed it? This is unemployment rate is in blue and Fed funds is in red. I've showed this before. All right, I'm going to make it big. I'm going to do this real quick because you guys need to know this. All right, or you guys, like at least somebody who's new who hasn't seen this yet should see this. Just an example. I can do this many times. 2004, 2005. You had a raise in rates, okay? Now, if you need me to, I can zoom into this. Let's zoom in. You know what? I'm not going to zoom in because I can just make it bigger. All right. Let's do this. Bear with me 1 second. All right. We're not doing that. I'm just going to tell you the dates. Fed funds rate peaked. Okay. Fed funds rate peaked in where they stopped. They stopped at 525. And that's about where they want to get at now. It's this and 2000s and prior. It's all the same. It's about the same. So they stopped at 524. It doesn't matter. They stopped at 5.25. Okay. July 2006. Okay. When do we start getting the uptick in unemployment? You really get it here because it's even with prior where they stopped at. Once unemployment rate got back to where they stopped at, when is that? That's December 2007. Right there on that, there's a big peak. You guys probably can't really see it. You can pull this up yourself if you want. So we have a pause in the rate hikes July 2006, and then 2007 August around the same time, because it's right here is when it really gets up, but this is when they get concerned about it. July 2007. Again, July 2006, July, August. Just say July, August. 1 year from when they stopped is when the unemployment rate ticked up to where the Fed said, hey, we got to do something about it. And this is the time lag. They were talking on CNBC like the Fed did their job, soft landing, this, that, the third. Give me 1 second with her. I'm so sorry. So, what I want to get into now, one more time, right here, 2000, guys. June 2000, you had a peak and a stop in the Fed funds rate. And what do you have right here? February of 2001 into March. Again, June 2000, and you had your uptick in the the pretty much the first, second quarter of the following year. Pretty much 1 year from peak. So they tell you all this stuff on CNBC. They tell you the soft landing this, soft landing that. Just give it time, guys. Just give it time. It's going to work its way. All right, banks, what happens in a yield curve? You have an inverted yield curve. So banks borrow on short-term rates and lend on long-term rates. Well, right now, them borrowing is costing them more to lend out if they're going to lend on long-term rates. So that is why banks stop lending. Bank lending is new money into the cycle of the economy. So I just wanted to get that across, because what I'm getting at is, until we get a real spike, maybe 2 weeks, 3 weeks of like a tick, like big ticks in unemployment, when you're going to start saying, when the market's going to say, Fed, Powell, what are you guys going to do? Let's get into it. So we've had a rally. This is the S&P. I want to make sure I've covered all of the stuff that I wanted to get to you guys, because I think it's really important for you guys. All right, so let's go to the Snap, the CRMs. What have we seen, guys, the past 2-3 weeks? We've had Apple all-time highs. We've had Microsoft all-time highs. You've had Meta, all these, NVIDIA. You've had all these big cap mega tech companies just rally to all-time highs. What did we just have? You just had mid-cap tech also follow behind it. Okay, specifically Snap, CRM, that part of technology, the smaller, well, not small, I'm not going to say small cap because they're not, but large to mid cap technology companies start to get bought up, and they got bought up by institutions. This is institutional ownership. Okay, you bring up Snap. Look at the volume, guys. Look at that volume to the buy side, and it was like all day, and it's still, look, day 2 continuation. That's a day 2 continuation, guys. And it's already off of a rally. So where do they, because mutual funds have to put money to work. A lot of these hedge funds have to put money to work. The past 2 years, they've lost money. Past year, I'm going to say, year and a half. They lost money on bonds and they lost money on equities. Long as in buying something and it going up. Okay, they can be long short, okay, which is they're short for X amount for a year. They back it up with buying the stock, whatever the math comes to hedge themselves. So if anybody is bearish, put your stuff to the side and just wait for the data to tell you, and keep a watch on how the market reacts to all the data, because you could get a random surprise somewhere along the line, and whether it's PCE, unemployment, whatever, what have you, you want to see and take notice, because they've gained ground. This is not like this is a runaway inflation of the 70s. Okay, China's opened up. We were very dependent on them. They've opened up. The world's opened up. But all the money that was had between the government, and they still have money to be pushing out for infrastructure, for this, that. There's still money that's backdated. Up until I think 2030, if they decide to use it, so there's still going to be a demand for employment. So but this is the story, guys. You had big tech cap run. Okay. If you don't know this is how the market works before COVID. You have big tech, which is, you hear them say the sector leaders. What are the sector leaders of technology? Apple, Microsoft, FANG, FANG stocks. They've all rallied, okay? They say it's AI, this, that. Nope. The institutions have to put money to work. You have retirement accounts. You have investors, okay? They have to put money to work. That's their job, no matter what's going on. Big cap tech rallies, okay? And then you have this space in between. That's not a healthy market, okay? That's not a healthy market. Well, now you're starting to have the laggards start to catch up. That's a healthy market. And it's not just tech. I have it down. I have it written down here, guys. You've had it across the board. What are banks doing? Like, let's pull up JP Morgan. It's working its way up, right? Look at JP Morgan. Let's go to the daily. All right. Look at JP Morgan working its way up. Do we get a few weeks from now? Do we start getting the M&Ts, the PNCs? Does it start to come off of its lows and follow behind JP Morgan, Bank of America, Citi? Okay, you want to watch that. Watch that, because this is the next area that institutions are going to go to when nobody's talking about it. Nobody expected Roblox, Snap, all these mid-cap, large-cap technologies, not mega-cap, but large-cap, mid-cap technology sectors. They all rallied. And Redfin, okay? You know, it was just all over, okay? They just all rallied. They got bought off the lows. And what did they do? They put in bases. They put in a nice base at the bottom. They said, where are we going to get our money at? What's not up at all-time highs that we can go to and buy? And they all did it. They all went up. So that's a sign of a healthy bull market. Now, how long does the bull market last? Until the data shows there's a problem. So for now, we are waiting for these earnings. I'm going to go on to the SPY. I'm going to cover this topic just a little bit more, just so you guys can get the picture if nobody's told you that this is what you want to look at. What did you have for gold? Because I'm going to go into the SPY, what I think. I'm going to give you my levels, trades, etc., etc. So gold, GLD, okay, that's just for instance, gold. I've been talking about silver. All right, gold has had a pullback. What did it do today? Look at gold, guys. It ripped. Okay, the dollar it's selling off a bit, but it's also at a monthly support and weekly support. Look at gold. It's sold off, and now it's starting to find a bid. But what's next? Let's look at the gold miners, because they're the laggards. Okay, GDX. Look at GDX. Huge run, right? Gold's already at highs. It's made new highs. Is GDX now on its way to follow behind that? So those two sectors I just gave you. Look at real estate, okay? Energy. Let's look at like Exxon, okay? What's that? XOM? Where's XOM at? This is Exxon, right? Look at Exxon at its lows. All right, so what are the smaller energy companies to show us a bull market? And I'm going to wrap this up. Let's go to like RIG. Look at RIG, guys. It's going up. This is I don't know, it's in like maybe 20, 40, 50 billion market cap. I could look it up. But look, it's starting. It put in a base. It put in its rally. It put in another base. And I had to pin it here watching it. These are the laggards starting to catch up. Guys, this is a bull market. Well, this is a healthy market. I have been wondering, when is the IWM going to catch up? Okay? When is it going to catch up? We got it the past 2 days. The IWM is starting to follow the markets, guys. It's starting to follow the markets. So for now, I personally am long. It's having trouble here. Stocks just don't go straight up and straight down. I showed you banks. I showed you energy. I showed you gold. I showed you tech. What else is there? All right. Silver, it's also going. So now gold's up. Now do the miners start to go? They are. I just showed you the day that the gold miners did. So this is a bull market. And the same goes for a bear market. When you have a bear market, it doesn't matter what it is. It's getting smashed. Everything. Energy, healthcare, banks, technology, it all goes down in a bear market. And you saw that from time to time, that like across the board, everything was red. Now what's happening? We're starting to get into a bull market until we have a reason to go down, like a major reason to go down that the market can price in. We're starting to go up, okay? Let's just see look at Shopify. It's starting to follow. These are the laggards of the big tech, all right? We brought up Roblox. We brought up Snap. Let's look at Snap. What I'm going to say about Snap, I'll give you the levels that I think. But right now, you have institutional buyers buying it. You got the wind at your back if you own it. I wouldn't just unload all my money in it. I'd have it, in certain areas because I want to know what's off of the lows. I mean, look at this. You have a gap up here. There's your ultimate target, 1532. All right, this will be your target because right now it's in no man's land. And what I can also do is, this is what we call money flow. All right, you want to see if new money is coming in or if it's just old money, if it's money leaving and it's just pretty much sellers stepping away and it's just a little bit of buying and then the sellers come in at resistance and sell it down. What I'm going to show you, because what you get from that is bearish or bullish divergence when the stock goes up and the stock's making new highs and it makes lower highs. Okay, and what that is the new money coming in to buy the stock. And I can already tell you right now, just with the volume, it's up. So on Snap personally, I would buy pullbacks. Ultimately, if you want to like nail this thing, you got to see what it does to 1273, 1275. You may not get it. The market may not give it to you because you just had this shakeout. This thing could just sit here and rally. What I'm getting at, guys, is we could sit here a month from now, even after earnings or midway through earnings a month from now, guys, and we could look back and we could be at 465, 470. I don't know, but I'm going to tell you right now, what I'm seeing is every single sector, the big names have went and still kind of going. But now you're getting the laggards to go. That the whole market moving up is the sign of a bear market or a bull market. That is a healthy market, and we haven't had that because you had the Qs, okay, all the way up here, and then the IWM was sitting down here, sitting down at the lows. You guys know that. I mean, if you don't, the IWM small caps, like this, cannot sit down here with the S&P, the Dow, or the Qs just way up here, because you have a gap. Like, it needs to be held up. That's not a healthy market. Just think about it like that. If you have all these things up here at highs and the sector laggards, like the smaller companies that are in the same sector are down here, there's a gap. It's going to fall. Like, something's not right. But now you're getting it. You're getting the lift up behind it to hold the big names up for now. Again, for now. Do earnings come in and we get huge misses? Maybe we don't. Maybe we do. Maybe that doesn't come until third quarter earnings. Maybe it doesn't come until January, February, first quarter to second quarter of next year. Do the institutions know what I just showed you with the Fed funds rate and unemployment? Why did I bring up unemployment? Because that's the number one thing that the Fed is worried about. So until that unemployment number starts to tick up, they're not lowering interest rates. And if they start to lower interest rates, that means there's an issue. Okay? So they probably see the same chart because it's not just 2000, it's not just 2005. It did it again in 2020. It's even prior in the 80s. It's literally a year long to a year, like 12 months to, we'll say 18 months, or we'll say 14 months, roughly. Because what you got to think about is how much interest rates have filtered through the cycle. Let's go back to last year. What was the Fed funds rate last year? Was it at 3? So that means we only have 2 more basis points of interest rates to go. 2. Were we at 4? We got 1.25 left to go. Or say it's all on if you use a 12-month lag, an 18-month lag, or a 2-year lag. It's all up to you. But I think the institutions know that there's time. And they're buying because they have to put money to work. So for now, I'm buying dips. Okay? Until we get a reason like employment. Okay? Like employment, guys. So you want to watch. And I'm going to go over the trade ideas and stuff like that. I just want you guys to take notice on what's going on across the board. That's a healthy market. Don't fight it. If you're bearish, I'm not telling you what to do. This is not financial advice, but at least have a hedge. Like, just put your thoughts aside. We know things are not all right or good at that. Like, things should come, but it's always never good. It's never great, or there's always a problem. Like, there's always something to worry about. Okay? It's never as good or as bad as we see. And as far as the charts are telling us, we can go into it right now, and I want to show you guys something that I think we could start to catch. All right, but it may be early. It may be early, but I want you to keep it on your board because at these prices, I nibbled on it today. It was one of my trades of the day, and I'm actually going to be probably buying it. I'm going to be buying it while it's down there, while I have the opportunity, because it's one of the last things that are on the lows. And these institutions want to get something on the lows that nobody wants or nobody's talking about is when they want to get it. Nobody was talking about Roblox and Snap. Out of nowhere, they just had these huge days. That's institutional footprint. It can take them months, if not a month, 2 weeks, 2 months. It could take them 6 months to get a full position in on some of those companies. Because if they wait, they want to buy under VWAP. Or, they just have so much money that for all of them to be a buyer, somebody has to sell it. Not technically, but, they're going to get these things up, and they got them up off the lows. All right, for instance, let's look at Roblox real quick, because this is a setup that looks pretty good, guys. See how we just sat here, put in a base, and I'm like, what's it going to be? If you see something basing, you can put a measurement on it, run a line, and we measured it every day. We're here live on YouTube Monday through Friday for free. We trade live. We come up with trade ideas. We in the pre-market. We tell you what we're doing. As I'm doing my trades, Chad's doing Chad had a great day today. Well, they had a couple of them had a loss or two. Some were good, some were bad. But it's never bad because we manage risk first, guys. And again, don't just take trades. Make your own decision. You have to make your own decision. But I tell myself, and I put it out there what it is that I'm buying and what it is that I'm doing. And I also talk myself through it. Just so you guys can see what I'm saying. And if you see something different, you can always say, hey, wait, you're missing something here. Look at this. And I'll be like, oh, hey, I owe you a steak, or I owe you, So we're all here to work together, guys. I know a lot of people don't have thousands of dollars to just go to a trade group to pay a whole bunch of money to just go over trading or just to go over charts and come up with ideas and trade together. You shouldn't have to pay thousands of dollars to be able to have a group that you can go to and, hang out, make money, eat, learn, all that good stuff. You shouldn't have to pay thousands of dollars to be able to do that. All right. But real quick, do you guys see what I'm saying with this bull market and bear market? So you have a clear look at this flat top resistance, guys, and you busted through it. It looks like we're just tested it. I had a circle here because that's where I planned on getting in, and it looks like it got there today. Left shoulder, head, right shoulder, and it breaks out. Now you want to look for the pullback, and look at the volume, guys. Let me zoom this in because this is a lesson that I was waiting for, and I missed roadblocks today because I took 3 trades today. All were green. Base hit trades, and I'm going to go into the psychology of trading too, because not even about trading in and of itself, but just give me 1 second. Left shoulder, head, right shoulder, guys. You break through it on what? An increase in volume, okay? On an increase in volume, and then you wait for the pullback to test that technical level of the neckline, all right? You can do it one of 2 ways, all right? But again, it pulls back to the neckline, and look what we had here. Look at the volume off of the neckline. That's that thick white line. And it seems as though the volume went away. It was the highest volume that you got today. Look at that. Boom. Right off of the neckline. Well, right in front of it. What it is they know that level's there. So there's orders. They sit and put buy orders in front of it. So that as it comes down, boom, they're getting filled. As it's getting to that level, they're getting filled. All right. I actually put out a limit order for my trade today, and I don't usually do that, but I got filled on the one chart I want you guys to see and keep on watch, because it could, and it's a seasonality part too, where it could open up for opportunity. Highest volume of the day, exactly where? Right on the neckline, guys. This thing could give us another continuation tomorrow into next week, so I will have that Roblox on my watch list. If you want to know what targets are, let's see. I have some levels. I don't have anything up above here, but what I can do is I can make sure. See, do I also have a pennant here? I think I also have a pennant right here. And what I'm going to do is I'm going to measure this out for you. Yup, there's a pennant there. Look at that. How beautiful is that, right? Look at that, guys. Boom. Break out of the pennant. Test it. High volume. You want low volume on down, and you want higher volume on the test off of it is what you want. We can do this one of two ways. We're going to put a line here and then to the neckline, and then we'll see where this takes us. All right. And then we're going to put this right here off of the neckline. Roughly, let's go to the daily and let's see if we have an area. Oh, isn't that, you guys already see it? Look at that. That's damn near at the top of this base. So we know we can get that. I mean, how else does institutional professional traders use to like get their targets? Obviously they use levels, but that takes us right to the gap fill, guys. Let me put it on there. Look at the top of that line. It pretty much covers this gap. All right, that's one way. You know what, this is better because I do this real time. We did it with what, Meta or something today. You measure the movement. Like if you have a push up, and we use, come join us Monday through Friday, 7:30 a.m. to 4 p.m. Eastern Standard Time, guys, and come get to work. All right, come get to work, and we'll teach you, like a lot of the main things you should know and what it is that you should look for to say, hey, what's the best way to position myself? What's strong? What's weak? What can I be long? What can I be short? So I wanted to cover the fact that the markets as a whole, all sectors, energy, healthcare, all that, the laggards are catching up. And that puts a bottom in for the heavy hitters, so that the whole market moves up. That's a bull market. When the whole market is moving up. All right. Doesn't mean we can't come back down and problems can arise. Doesn't mean that at all. But again, I had to get that out because it's so important. Nobody talks about that. And a lot of times they don't talk about it because they want to keep it for themselves to say, hey, look what I did. Or this or that. They don't want to tell people certain things. And it's bullshit. It really is. Excuse my language. I am sorry if there's kids on here. But there we go. We got the test right there. So it may not, it's on a hourly or a daily chart. So it's just going to price in the, it's not going to be exact, but there it was. So if I put that there, like it's putting us right at these highs. So we know pullbacks, eventually 2 weeks, a week, maybe a couple days. I don't know. It's going to get us there. So let's do it with Snap. I can go back and erase that because I want to see. He asked me, Hayden. That's Hayden, right? Yeah. He want to ask me about Snap. So let's do it. I mean, we know we have a gap fill there, but how can we what can we use to back up our long? Like, how can we get comfortable? You guys have to get comfortable. What can we use to say, hey, I know if this does this, it should do that. The probability of it doing that, is great. You want you just want to be able to, man, this thing's made a run, bro. This is crazy. That's insane. I completely missed it. Look at this. Like this type of volume, when nobody's talking about it, that's institutional buying the dip. Right off of the resistance. I mean, so I just thought that was important though, guys. Sorry, once again, just showing you the energy, the smaller energy names like Rig, HP, Tidewater. I did want to look at the trade desk, but it's gold miners, it's energy, it's tech, and tech really started it. The mid cap, large cap tech. Really started it. Airbnb, Roblox, Snap, they bought the shit out of them, and they still are. It was just that they sunk their teeth in it before they missed the opportunity to get a good buy-in. And look how it held this resistance, guys. Look, resistance, even from prior. I can get rid of these lines. So what we can do, the best thing I could probably do for you, we know we have the gap fill, but can we measure something to see if it takes us to the gap? I could measure the first move from this low here. right? Let's go from this low to the move from right now and see where it puts us. We could even just do it in math terms too. We don't really have to measure it. So I'll put that there, and then we'll go up here. Well, let's just see if this takes us to, I think it was 15, right? If we get up here to resistance, let's see where this takes us. All right, because I'm telling you, it's not a coincidence. Nothing in the market is a coincidence. All right. Oh my gosh, look at that, bro. Are you fucking kidding me? You see that, right? Do I got to make it bigger? All right. You just have to learn how to market. You just have to, you guys just have to learn how to stock. That's all it is. I have logarithmic on it, so it's going to be a pain in the ass. Tell me that ain't crazy. It's not crazy. It's not a coincidence. Institutions have this on their chart, and this is how they know where they can expect to take some type of profit. Where can they get it to? What's the percentage? They will measure that move, and when you get this pullback, watch for some buying to step in. It may sit there for a minute, but if this level here does not break, give it a day or two, like as it gets there, and you can see how it reacts right off of this level. All right, that literally takes us to the T, guys, to the T. This is why I try to tell like members and stuff, like, let's measure the move, you know, and you'll be surprised that it'll psychologically help you say, hey, yeah, this is probably where it's going. If I'm in calls, just as long as I have time, I'm not going to get ate up with theta, and I should be able to take profits along the way. And clear as day, like we said, we had a gap fill, and look at that, man. The measurement of this move takes us right to the gap. It's not a coincidence. So I'm putting Snap on mine too. So I got Roadblocks and Snap as a trade plan. I already had Roadblocks. I was just in 3 other trades. But I know Roadblocks is where I was at my target. RBLX and Snap. Snap gonna make for a good trade. And I'm telling you guys, $12.50 to $15. I mean, that's like a 20% just in the stock alone. 25, maybe 30% just in the stock alone. What do you think those options are going to do? You know? What do you think those options are going to do? So hopefully this helps you feel, you know, I haven't moved it. You know, I just want you guys to know, just knowing things like this, like measuring the moves. Maybe we, you know, just using indicators. So if we pull up a 15-minute chart, let's look at the MACD. Like, look at this. Here you go. This is how you know you have a bullish stock. Look here, for example. On this pullback, what do we have? Let me bring this up. You have a decrease in volume. Look how low this volume is. Right here on this pullback here. You have a lot of buying in there, but they did sell it off end of day. Look at the MACD. Look at the stock, okay? Look at this. It made a low. Makes a low. MACD makes its low, right? Makes its low. It puts in a new low, and the MACD puts in a higher low. That's bullish divergence on a support level, a prior resistance turning into support. Look at that tail. Look at that tail there, Hayden. I hope I'm getting your name right, by the way. I hope I'm getting it right. Thank you for bringing up Snap. Greatly appreciate that, Hayden. So do you see this? This is a MACD, moving average convergence divergence. All right. You put in a low, MACD puts in a low, Snap puts in a new low, MACD puts in a higher low. That's bullish divergence. The stock is coming down. The moving averages are going up. All right. That tells you the breadth. It tells you like what's really going on order flow, right? We could also, so I'm going to get into a couple of things. I'm going to show you guys something real quick too. I wanted to make this stream as quickly as I could. Not that I want to, but I just, you know, sometimes people get bored. Look how we just based here. You know, just put in a base and it's on, guys. So now, so mid cap is where I'm going to be, like large cap, mid cap, like your Snaps, your Roadblocks. I'm going to be paying attention to them. All right. I have been, but I wasn't paying attention to them until just a couple days ago. Real quick. So what does that mean for retail? What I do want to see, though, is if these retail banks like PNC start to get going. They have to, because, and well, we're about to get earnings, but look at this. This is a reverse head and shoulders. There's your left shoulder, head, right shoulder. Guys, this is the trade idea. We know we get to this level, we break it, and we're buying the pullback on it. We should get an increase in volume. Like, we don't just randomly buy it. You could, because you know what does this do? Buying on resistance, turning into support, you can use volume. The way that the stock gets to it, like we've seen roadblocks. It had some selling to come down, but even at lunchtime, it had a greater volume of buying right on the neckline. So the orders, it didn't even get to the neckline. It was a few cents off, which it's always an area. But that tells you institutional money managers have orders sitting in front of it that they want that stock to buy. They want it. They just want in. Are sellers stepping down and are buyers stepping up? You should ask yourself that in your trades and just when you're looking at charts. Why is that? Because this tells you what's going on. And that's what you ultimately need to know. What's going on? Are the buyers stepping up? Because if the buyers are stepping up, the stock's going up. If the sellers are stepping down, the stock's coming down because they want out. And they want out now. They don't care what the price is. They don't wait. They don't just step away and let a few buyers bring it up. No. They're selling. They want out. They want out now. So something's either going on or they're moving their money somewhere else. It tells you that it's not just profit taking. Okay? It's not just profit taking. It's, I want in this stock. I don't care what price it is because I know I still have 25, 30% upside. Or if I do this along with this, I can do this. And, these fund managers have had a hard time the past year and a half, guys. Seriously. I'm surprised a lot of them haven't went out of business. That was the one thing I was waiting for, was hedge funds to start going, because bond market lost money, equities lost money. If they were not short, if they were not long short, which is the correct, term, it's how if they weren't short, then they didn't make money. The thing is that they have to put money to work. It's their job. It is their job to take a percentage from investors and people that have 401ks and pensions. They get that money. They have to put it to work or else they don't get paid. They don't get their percentage. Now, some have terms where they can sit in cash or they can go, some money can go to the bond market. But if you were in the bond market, you just missed out on a 20, 30, 40, if not Meta, Tesla, 100% gains in the stock alone. So they're coming in. They're saying, you know what? These stocks are on their lows. We don't have a banking crisis at the moment. We don't have a recession at the moment. We know if we do have a recession, it should, by the book, take us at least until next first quarter of 2024, Q2 of 2024, Q1 and Q2 of 2024. And even then, what is all this money from stimulus going to do? Is this recession just getting pushed back another year and a half? Are we even going to have one? Does things start to get bad and the Fed step in to save the day? Think about it. So let's just worry about what's going on right now. We're getting ready to come into earnings. Let's go into the SPY, guys. Thank you guys so much for joining us tonight. I hope some of this has helped you and given you guys a mindset when people say dumb money, smart money, or they say it's a stock picker's market. No, you don't have to worry about picking a stock in general. You just have to know the leaders and the laggards. And are the leaders leading and the laggards are still waiting? Okay, the leaders, they get to where they were. Apple, Microsoft, they're up at highs. You got a little bit of time go by, about a month or so, not even. It's probably been 2, 3, maybe a month since they've been up around highs. And then we got the laggards start to follow behind in a healthy bull market. Okay, I don't have a target. I'm not worried about the move. I'm just worried about making money. All right, I'm worried about making money. I'm just letting you guys know and expressing out loud instead of being a weirdo in my head talking out loud to myself. But that's what we're seeing. And look at retail banks. This is retail banks right here, PNC. If you guys don't know, this is a left shoulder, this is a head, this is a right shoulder. That's a bullish pattern right there. And if you get these going, I guarantee you will see the SPY at 460, 470 by August, September. if not October. Well, usually September's a bad month, so we get our pullback. So let's go into SPY. Let's see what I say. But first, we got to get these banks. We got to get some PNC, M&T, and there's probably other banks, whatever's around your region. You should be able to kind of know whether it's like, because you'll have like your large cap retail versus your like smaller cap retail, okay? But these are the ones that matter really, because they're these are the laggards. It all depends on where you're from. New York Bank, was that BNY Mellon, or there's some that I don't know, some that I do know, but it all depends on your region. You're not going to know every single one. But whatever is like one of the biggest banks by you, and if they're publicly traded, just watch them, like TD Bank, things like that. M&T Bank. It all depends on what area or region you're in. So let's go to the SPY, guys. What do I want to see? I already told you whether the number is good, in line, or like we see an uptick in unemployment or just a slight downgrade in unemployment. Like what does the market do then? Does the market start to sell off? Because there is going to come this point in time where the market is going to say, if the Fed keeps talking, like if the unemployment rate just continues to stay where it's at, and they're like, yeah, we can just raise interest rates and raise interest rates and raise interest rates, the market's going to do what it did in 2018. And it's going to tell the Fed, yeah, you need to slow down, you need to stop it, you need to give it time, or we're going to take it upon ourselves to start pricing 6 months from now, because the market is a discount measuring is a discount measuring mechanism that discounts prices 6 months down the road. Sorry, it was like a tongue twister. So if the Fed starts to get overhand or overboard, the market will be quick to tell the Fed, yo, you got to relax. You got to give this shit some time. Because if you don't, the banks are not going to lend. It don't matter how bad you need the money for an emergency, whatever. The banks are done lending. The banks don't lend. Businesses don't get paid to pay payroll. One more thing, if you're new, the other thing that nobody's talking about that you're going to hear first, okay? Mid-cap companies, okay? Mid-cap companies who rely on the bank for operational expenses. If they did not borrow prior to, in COVID, prior to these interest rate hikes, if they did not borrow at long-term rates and were greedy and got money at short-term rates, depending on however they did it, if they did not lock in short-term rates for longer, and they're running through cash, biotechs, all right, I said this last night, high interest rate doesn't just affect tech, it affects biotech, all right, small mid-cap companies, small caps, because they're cash intensive, because they're starting the business, okay? They don't want to pull equity. They don't want to do offerings. They don't want to do that. They can go to the bank and they can get it lent to them. And what happens is if they run out of cash and the bank decides we can't give you this amount because you aren't making any money, matter of fact, you're in debt, all right, we'll give you this, but it's going to be at this interest rate. They're going to get less money at a higher interest rate. So their valuation is going to come down. All right, that's something nobody's talking about. And what companies don't make it out of this when we get there in time? We still need time. All right, that's one other thing that nobody's talking about, is a lot of these companies that are strapped for cash that may run out of it and may not be able to get what they need to survive. That's when you start seeing the unemployment tick up. All right, things like that start to play its role. College, these kids have to pay their college tuitions back. That's going to eat up at it. So they're not spending I'll use Crocs as an example. They're not buying new Crocs. What's Crocs do? Well, they've done well over the time. Did they put the money to work well and pay off their debts and do what they should do? Or did the management just completely fuck up? Excuse my language again. I need to not cuss on here. Let's go to the SPY analysis. Go through a couple of trades. We went through roadblocks. Join us in the morning if you want, 7:30 to 4. We'll be live. We go over whatever news we wake up to. We go over how we think we should be reading it. We get our levels, and we get prepared. One lesson real quick. I went through 3 trades. I can go over them. This is taking a while. But if you guys are okay with it, I'm okay with it. Again, if you have any questions, hopefully Hayden was around to be able to see that Snapchat. Okay, because that's important. That can give you conviction to be able to say, hey, on these pullbacks, I'm going to see it at this level. I'm not just going to just step in front of it and buy. But if I see buying in front of it and I get the indications that I need to give me the green to go, to push, the buy button or whatever, then, you have your upside target. If you play options, just do yourself a favor and get time, and don't buy too far out of the money that it's not reachable, because it's going to go up. The stock's going to go up, and then just on that little bit of pullback, it's going to bring you down red. And then it's going to go up, and then you're going to be like, dude, I'm break even in red. Because a lot of people don't know how theta works, how it really, really works. Just like moving averages. Moving averages are time and price. Time and price. But the time is the key word. All right. The SPY is coming up to the 450 zone, and we're coming into earnings. I want to see a pullback in the SPY. I want to see a pullback for me to be a buyer. Now, there hasn't been much volatility. I told you guys, remember how we said everybody's talking about an island reversal. Well, we have an island reversal right here as well, to the upside, a bullish pattern. Okay, we have an island reversal here. This is how we go through trades. We have an island reversal there. We have a bearish island reversal there. So we have 1 and 1. Now what we're trying to do is get conviction on what side of the trade we need to be on. All right, so I got 1 and 1. We're tied. What else do I have? If I go to the hourly or the 15-minute chart, I also have a reverse head and shoulders in that island. Left shoulder, head, right shoulder. And I also have it breaking out on increase in volume with a pullback to it. And I don't have the increase in volume, but it bounced right off of it. Didn't do it there, but it did do it here. It did it here. All right. So it didn't do it during the market hours again. So we still kind of have this gap, guys. It found support here that day, but it hasn't retested it again. Like it didn't touch it. It needs to look back and touch it. So that's 2 to 1. What else? What other bullish sentiment can I come up with? The volume. Look at all these. Look how high these candles are end of day. Boom, boom, boom. They're taking profit. They're selling. Look at that one. Bang, bang. I can bring it up if you guys can't see it. So now we're tied 2 to 2. All right. This is how you come up with reasons on what, like which side of the direction. You should come into the trade with no bias. All right, and let the chart go through the chart and say, what do I have that's bullish? What do I have that's bearish? Which one? If I have nothing but bearish things, I have not one bullish thing, chances are you should be short. You should be grabbing puts. All right. So the S&Ps, I was honestly certain that we would go up. I did not get my buying opportunity. All right. I was still patient, which we could still see some downside, or this market could leave us. Now that I've seen mid cap, small cap, or large cap, mid cap, technology, the gold miners, the smaller or the mid cap energy groups, they're starting to follow. Now I don't know if I'll get this until maybe next year. We could rally up until next year when we have the recession, and maybe this double top that I've been waiting for is when we get our pullback, just like we did in 2020. You guys remember we hit 400? Remember it was like 399, 398, and then it gapped up to like 402, 403, and you never got to 400? Well, a year and a half later, almost 2 years, a year and a half, almost 2 years later, we revisited that 400 level. So I think that's what might take place. All right, so that's why I'm also bullish, because I think if this market just runs and doesn't look back, they're still buying calls. Okay, real estate, all construction, like not construction, but industrials. If I pull up the heat map, everything is green. And what's more important though is that it's not just the leaders; it's the laggards that are green too, following in the footsteps. That's a healthy market. That's not something I want to be short in. What I'm going to look for in the SPY though, for right now, guys, is I want to see a pullback into this level. All right, I want to see a pullback into the double top, and that's where I want to sink my teeth in getting long. Right here, I can get rid of all this, and I will tomorrow, because I know it's hard for you guys to see, but that's where I want to be long. I want to be long right here. All right, and I'm going to give you that level. That level is 443.82. Call it 444. That's so weird to say. 444. 444. All right, we're at Wendy's. 444. Give me that Junior Bacon, bruh. So what else do we have? Like, we're so extended. We're above the 50-day. We're above the 9 EMA. Okay. You know, we're extended here. I want to get a decent pullback. What could give us a pullback? I'm honestly not sure. You know, maybe it's the job numbers tomorrow. Maybe it's earnings. Maybe we just get a pullback tomorrow. I don't know. Maybe the job number is really good, and we get a pullback because they think the Fed thinks that they can continue to raise and raise and raise because the labor market's just getting better. Okay, that's not helping demand. So maybe the psychological part of the market saying the Fed might do too much is when we get this pullback. Or we might just get a pullback for no damn reason, just to sink some new buyers in here. All right, the RSI. Where's our RSI at? Right here. And guys, also, what are we doing? What are we doing? No. No, what the heck? No. Okay. I don't know what happened there. So, look at this, guys. I know you can't really see the S&P with all those lines. Does that help? Look at what we're doing. This is bearish. Okay. You put in a high. You actually put in a little bit higher, but it's a lot lower. It's a lot lower. I mean, it's where it should be, kind of. You know, 30 and below is oversold. It's like 60. 60 to 80 is overbought, even though you can go to 100 or wherever, you know. So I do have that, you know, like the stock put in a somewhat of a new high, RSI a lower high. But for sure, we have the lower high, or we have a new high now with the definitely lower RSI reading. So keep it on watch. It may be a story to tell. All right, so we'll get our pullbacks. Weekly charts are important. Oh, the stock, before I forget, guys, this is, I think, some opportunity. This is the last thing that I want to see to give me like even more of a reason to go long, and I think it might be early. That's why I'm going to probably buy the stock itself. I did play call options on that today. They were green. It was like over 10%, but I was only in it for, I don't know, a half hour, an hour, if that. It had so much momentum. Look what it did today. All right. So you've had stocks. Look at that, just all day. Boom. 9 EMA. Boom. Boom. You want to use these 9 EMAs as buying points and selling points. If it's strong and you got momentum and it pulls back to it, put your order in right at it. Give it a minute. If it's really strong, it should bounce off of it. If it's early, like if you try to do it up here and it's already rallied for an hour to 2 hours, chances are, you know. But if you know what to look for early on, come join us, 7:30 to 4. We trade live for free right here on YouTube, guys. We've got a lot of good members in chat. We're all helpful to one another, you know. So, TLT. There was another thing with this. So, TLT, some of these stocks are going to give you a cheaper premium to play if you guys want to like YOLO, like CPI, PPI, and stuff like that. Like, I was telling the one member in chat to look for something besides the S&P, because the S&P, as far as sellers selling it to you or the market makers, they're going to price it up so high. They're going to price it up to where there's so much premium baked into it that even if it does go green, like you really should be getting paid more. They're going to price it up so they lose less and you make less. If they're going to lose, they want to lose less. So they're going to price it in. But where do they not necessarily go crazy on premium? Because they know the S&P, the Qs, the major indexes, everybody's going to flock to it. So if you go to TLT, it had hardly no premium. You could have made so... I'm not going to say that, but guys, TLT is just one example of somewhere you can go to get the same type of run, but possibly have more of a profit because you're not paying up so much premium because people aren't thinking about going there. And this is the sector that moves. All right, the 2 years been moving up. Stocks have been with it. The 2s have been moving down off of that level, pricing in the Fed. Now TLT, if you see yields continue to come down, in the morning I watch the dollar. Okay, you can look at that through UUP or DXY, as in Dixie, DXY. You'll have to put a $sign maybe. If you have TradingView, just put DXY. It'll come up. I watch yields. I watch the dollar. I watch the VIX. I want to know where they're at in the morning so I know kind of what I have going on. Because if there's a big movement, something happens overnight, currencies are going to feel it. The currencies will, if you see a big move in currencies, something's going on, check the news. And that's going to lead into the market. Okay? TLT was one of the trades today. I don't even remember the other two. What was it? Did I play AMD? I played AMD. What was the other one? Oh, I played Amazon. I don't remember. I had to bring up my brokerage. If you guys want to know, comment in chat if you want me to go over my trades. I can go over TLT real quick. All right, this is a 5-minute chart. I was using a 3-minute. I use them all. I use 1 minute, 2 minute, 3 minutes, like 15. I use all of them so I can get a feel on what's going on. So I seen TLT had an astronomical amount of volume and momentum. But what led me there? So when you see yields come down, short-term yields, as in the 2-year, the 10-year, TLT is going to rip. All right, as yields are coming down, the bond price is going to go up. In the flesh is TLT. Yields came down off of that number, and what happened? The stock price went up. All right, we were actually a buyer of this a while ago. We've been watching it, and everybody was talking about being long TLT. I'm like, why are you guys being? Why do all these people on YouTube say they're long TLT, like back here and here and here? Guys, higher for longer. All right, let them have the rates set up there for a little bit, and you'll know when it's time. This could be the shakeout to price in 6 months from now. Maybe they're starting to price in cuts. So, but what also happens is, I will post this tomorrow in the live. I promise. I will show it to you guys. If I have it on my phone, I can show it on my phone. There are cycles that institutional ownership uses. All right. There is pretty much a guide, a book map, a roadmap on what happens between equities and bonds. Okay. Equity markets and bear markets, they sell off. There's usually 2 stages. Okay, but they sell off, whether you have 1 stage, 2 stages, 3 stages, whatever. Just one. It pulls back. Bonds also pull back. Well, the equity markets go up, but the bond market still stays down and even pulls back a little bit. I think now, quite possibly, could be the start. And I'm talking August, September, is when it would really really start. I'm just going to watch it because I'm telling you right now, this is the chart I had in the thumbnail. I don't do the clickbait stuff, guys, and I'm not a doomsdayer. I'm just, if it's doomsday, then I'm a doomsdayer. All right, until we have but like a comet or something to be worried about. If it's that bad, money is not a priority at that time. If it's ever that bad, you ain't going to be worried about money. I'm going to be watching TLT because what do I see here? Just like I saw with the other ones, we have a base. We have a low being put in, double bottom. You put in a base. And what happens is I told members, I try to tell them all the time, like different things, because there's a lot to learn in the market, okay? I'm going to give you an example, okay? You have, like we've seen, and you'll see this play out. Well, you've seen it. If you look at Snap's chart, you'll see it. What you'll get is you'll get a rally, okay? You'll get the stage 1 of the rally, right? And then you'll have the stage 2, which is the base. It'll just sit there, put in a base, and then you'll get your sell-off, and what that does is it shakes people out, okay? Only to go and do something like this, only to rally. Boom, second leg. All right, what do we have here? What does that look like? This looks like the start of the base for the first leg higher. Doesn't mean it is now. Doesn't mean I'm right. Doesn't mean I'm wrong. But I know if the market's looking 6 months ahead and we're already in June, July, and I'm telling you, I think first quarter, second quarter is when we start to see the recession, we start to get the Fed rate hikes. Well, if the market's a 6-month mechanism, or 6-month forward looking, then this going up is going to tell me my thesis is right, that I still have time to be long equities, and I can be long TLT because I think yields are going to come down because they got to price future possible Fed cuts, which that Fed cut, the market's going to already kind of be wherever, like it'll be at like 4. We could just use that. We don't necessarily need the Fed. We could just use the 2-year. But this could be this. We are 6 months away. We're, to January, roughly. So is this shakeout right here? Because we were long at 100. I told members every time in this here, I said every time TLT gets to 100, we're a buyer. It gets to 103, we sell it. That's a $2 trade. $1. Listen, I'm going to tell you, I got 20% roughly, all right, on a trade that was from here to here. It was, or I was either on the second leg, I was either on this one. I think I was on this one here, guys. I was here. And then we got this big extension. It pulled back to the 9, and we got it, and I was out there. This little bit of movement gave me just about 20%. Imagine what $2 is going to do for you. Okay? You got to buy right, though. You got to buy right. I bought the pullback on that tail. I said it put in a base, did not break pre-market pre-market. I'm sure it's lower, but it did not put it, the base that it put in, it did not break the CPI number is what I'm saying. It didn't break the CPI number, and it shouldn't. And I'm seeing, I didn't even have to worry about the 2-year. Like, I'm seeing the 2-year come down. The 2-year yields are coming down. This is going to go up. The price of the stock is going to go up. So that's why I went to it. All right. Psychology, real quick, guys. If you'd have told me this morning, if I'd have had 3 green trades, I'd have said you're lying, because I did not hardly get any sleep last night. I just, like my leg cramped up, my foot was cramping up, so I fell asleep. I got a cramp, drank some water and stuff, and then I was up for a little while, and then I fall back asleep, and then I wake up at 5, feed my cat, and I'm sitting there watching CNBC. I fall back asleep for about an hour and a half, and then I get into like a deep sleep, and 7:30, 7 o'clock comes along, and I'm like, oh shit, I got, it was really hard to get up. So then I'm running around doing stuff. My keyboard wasn't really working, so I changed the batteries, and it was either the Thinkorswim, or it was something. All right, so it was them kind of morning. I was frustrated. So you're going to see me, my highs, my lows, the good, the bad, the ugly. You're going to get it. I'm human. All right. I make mistakes. Okay. But I do my best to show you guys as an example on some of the things you should be doing if you want to make money in the market, because the market's not a scam. If you do this right, you can change your life. You can change your family's life. It's a fact. It's done all the time. There's a reason why we have the most liquid markets in the world. But you have to do it right. You can't gamble. You have to be patient. I was so upset that I didn't think I was going to put a trade on today, because I didn't have the research done for the morning news going into CPI. I just felt I wasn't prepared, and I was frustrated. And then it comes, it's like, this is going up, let's just buy it because it's going up. I don't do that. I sit back. So that's why I was so mad. I was so mad, but what happened? If I would have traded, I'm sure I would have just been even more pissed off, would have lost money. It would have shown up in my P&L, but it didn't, because I didn't make a trade. I let a little time go by, a little as in a lot. Like, I think it wasn't until 10:30, if not 11 o'clock, if not close to 11:30 before I made a trade. I made 3 trades. All 3 of them were green. I couldn't believe it. Now I'm happy as a dog, and I'm going to go get some sleep. Thank you guys for joining us. I hope I covered everything for you guys. I want to stress to you guys that multiple sectors are going up, okay? Multiple, as in pretty much all these sectors are going up, and they're not up by a few names. Now the laggards are starting to catch up, all right? We'll go over a brief if you're just joining us. All right, we went over Snap. We went over Roblox. Those are 2 really good trades that could bring some opportunity, all right? today. Pan W. There was news with Microsoft today, guys. Microsoft. Watch Microsoft. Look at this sell-off. This is an astronomical amount of money. Whoever had puts just on this leg, and again, if I draw this out, what's going to happen? I mean, the move started up here, but I can start from wherever it opened. If I do this, all right, and I draw this line down to here, down to where it sold off, and if I take that line and I go to the second leg of this downside, how much do we want to bet that it equals the same? Sorry, I did it wrong. I'm sorry. If we go from here and we put this where the move started here. This is where the move started. Boom. So right here is where it started. I can bring it down a little bit. I want to be fair. I want to just do it right. All right, to show you guys, where did the second leg start? It started here. It started here, but it hit the 9 EMA. So we'll say there. We could say here. It don't matter. Where does that put us? Right at the very second. That's the second leg. I didn't know about Palo Alto, but there was news out because of Microsoft. This is why Palo Alto went down, because Microsoft is doing their own thing with with security and stuff like that for web. So yeah, Microsoft's rolling out their own, and CrowdStrike, Palo Alto, they all got hit. Because that's big. If Microsoft doesn't need them, that's big. That's huge, guys. You could see this stock not be in the S&P anymore. No, this is big enough to where it probably will be. But things could get bad if it's really that good. If Microsoft really does what the news said, guys, this move here is completely backed up, right? What did I say? The market doesn't go down unless it has a reason, and until it gets the news that it can price it in. You can't price in the unknown. So what do? You go sideways or you go up, or you go sideways and then up, until you have a reason to price in lower prices, until there's a reason for people not to buy and save money and create wealth. All right, they're always wanting to, so there's always going to be a bidder bidding it up. All right, people are always wanting to put away for retirement, 401ks. So whoever has the stock and they want to sell it, they're going to get the best price that they can. And people are always wanting this, so that's why we have bids. And it's not just the United States, it's around the world. Guys, thank you so much for joining us. If you found any of this information valuable, could you please do us a favor? We're trying to get to 100 subscribers. Send it to your friends. Like, share, subscribe. Even better, join us. Okay, join us live Monday through Friday, 7:30 Eastern Standard Time in the morning till about 4 in the afternoon. Well, really till 4 market closes. We stay after for earnings calls, all that. We have pre-market. We get our trades together. We get ourselves together. We talk about what's going on, what we need to look out for. All right, we try to put ourselves in the best position. We also have traders, not just me, that get in the comment section. We're putting out trade ideas all throughout the day. We're covering news, Squawk Box, all that fun stuff. So we'd like to see you there. We'd hope you join us. And if you're new, don't be shy. Ask away in the comment section. You know how rare it is to have somebody that's done this for so long, a professional trader who does it for a living, to say, ask your questions. I'm not going to charge you $1. Do you understand? Like, just that sentence alone? Like, what? What? Guys, if you're trying to better yourself, come on. I have respect for people, and I just feel like there's ways to go about doing things. All right? If you guys have any questions, throw them in chat. Meet us on the live stream. Same place, Ivy League Trading. I just want to thank you guys for joining us. And even after the live stream's over, we read the comments. We as in me. I don't know why I say we. All right? I do hope to get a team going here. Big shout out to my guy Collins in the chat. He's going to be one of them. All right, so we've started. We've been here for about a month. Yeah, it's been about 4 weeks, 5 weeks. I went to Florida for a week. My laptop, I wasn't sure if it was going to be able to handle a chat, my charts and orders and all that stuff, so I didn't stream. But we're gonna have alerts and stuff like that. We'll get there when we get there. Again, thank you guys for joining. If you guys have any questions, what I'm getting at is throw them in the chat. Thank you guys for the likes. Thank you for your time. I respect your time. So I hope I was able to help you guys out with something valuable so you can start to see what are the markets doing. You got to see this. Like, people aren't talking about this. They were talking about the reverse island reversal, but turned out that got blown away. But we knew it. We said, hey, we got a cup and handle here. We got a reverse head and shoulders. Yes, there's that island reversal on the S&P, but it's like, what is the reason to go down? You got to ask yourself that. If you're bearish, why? Okay, well, when's it going to show up? Is it PPI that's going to send us down? Is it this job numbers that's going to be the start to send us down? Chances are it's not. So we need more time. All right. Thanks again, guys. If you could, like, share, subscribe. Thank you guys for joining us, guys. Have a great night. We're going to see you in the morning. Get some sleep. Get ready. It's game time. We got 2 more days left in the week. Take advantage. The past Thursdays this year, watch out. All right. Go back to January. Look at every Thursday, and you'll see something. All right. That's my task for you to do. Report back in live wherever and say, hey, give me a wink or something. You're going to see what I'm talking about. All right. Go back, whether it's the S&Ps, go back to the S&P because that's technology and everything. And go look at specifically Thursdays. Go see what happened on Thursdays. Thanks, guys. Have a great night. We'll see you in the morning, 7:30 to 4. Like, share, and subscribe. We'll see you guys. Thank you guys for joining us. Have a great night.